Hello, everybody. Welcome to today's webinar. The tax season is approaching soon, and this webinar is going to give you an overview of tax system in Canada, including the all-important topic of how and where to file your tax returns. We would like to state here that this is not a technical presentation. We are not going to discuss how to calculate taxes. Neither this presentation is advisory in nature. It's only for information purposes. So let's begin by introducing the presenters first. We are three of us who are going to present this webinar. My name is Jyothi, and I work as lead staff, financial empowerment for Newcomers Project at North York Community House.
And me, Valentina, Camilleri, school settlement worker.
And I am Bharti Lokre, school settlement worker at North York Community House.
Now let's look at today's agenda. We are going to start with the foundations of tax system, which is the Canadian income tax system, which is a brief overview. And then we will move on to documents required for filing. And then tax deductions and tax credits will follow. And then the most important topic of tax refunds. And finally, we will end with community volunteer income tax program. There will be a question and answer session at the end of the webinar. However, you may type in your question by clicking on and typing in your question on your right-hand side. And we'll be happy to answer all your questions at the end of our presentation. Now, let's look at the Canadian income tax system, some of the basic principles. Now, most of the countries of the world collect taxes from its residents and citizens, and Canada is no different in that respect. The tax collected is the revenue to the government and is used for countries' development and also economic and social programs. In Canada, government collects taxes through an agency called Canada Revenue Agency, or CRA for short. And all of us have to pay taxes if owed. Otherwise, the CRA turns into a collection agency. And of course, we definitely do not want that to happen. Now, let's look at how do you determine if you need to file tax returns. This is based on a complicated concept called residency for tax purposes. And residency for tax purposes is completely different from residency for immigration purposes. Now, in Canada, there are 4 different types of residency for tax purposes, but we will discuss 2 major types, which is residents and non-residents. Now, let's look at the residency status. Resident of Canada is someone who has significant ties to Canada, such as a house, a spouse in Canada, dependents in Canada, driver's license, etc. Residents are required to pay taxes on local and also worldwide income. Now let us look at non-residents. Non-residents are those that do not have ties with Canada and live in Canada for only a part of the year, which is less than 183 days. Non-residents are required to pay taxes only on Canadian income. So let's link up the residency statuses that we have discussed so far and the filing status, because you need to file your tax returns based on your residency. And residency is a very complex topic. And as tax filing volunteers, it is not our responsibility to decide residency status for anyone. And we are not authorized to advise such. So people who are not sure of their residency status must contact the CRA. You can also contact at the link provided below, and the CRA will get in touch with you and you can understand about your residency status. Now, let's look at the newcomers and their tax filing status. Now, who are newcomers to Canada? And we are going to discuss this from tax filing perspective. And this will be discussed by my co-worker, Bharti.
So newcomers to Canada become residents of Canada when they land in Canada. All newcomers, irrespective of their immigration status, are clubbed as newcomers for tax purposes. They could be conventional refugees, work permit holders, and PR status. All of the above newcomers have to file their tax returns. All those who arrived in 2019 will file their first tax returns in Canada in 2020. After their first tax filing, they are no longer considered as newcomers for tax purposes. Let's look at international students now. International students may have to file their tax returns depending on their situations. Usually, most of the students who study here work and acquire work permits, so they have to file as residents of Canada. Now, let's have a quick question for all of you. There is one question in front of you. Is tax filing an obligation for everybody in Canada? Please answer by clicking yes or no. You have 5 seconds to answer. Great. So we have a mix of the answers here. The correct answer is no. It is not an obligation for everyone. It becomes an obligation only if you owe taxes to the government. Now let's see, when do you file your tax returns? In Canada, there is a designated time period when an individual has to file the tax returns. Every year, it is from January to April 30th, while in principle, it is stated as January. However, the tax software becomes operational from mid-February every year. So it is safe to say that between mid-Feb to April end is the tax season in Canada. The returns are filed from the income made in the previous year. So when you filed returns in 2020, it is for the income made in 2019. So what are the benefits of filing tax returns? Let's go back to our poll. Remember that we discussed tax filing is not an obligation for people that do not owe taxes to the government. However, if you want government benefits, then you will have to file tax returns. So if you owe taxes, the government is behind you and it becomes an obligation on your part to file taxes. If you do not owe anything, the government will not be behind you. However, it becomes your responsibility to file tax returns to receive benefits. Now let's see what are the documents you need for filing tax returns.
Hi, there are various documents required for filing your tax returns, and those are proof of your income, your rent, tuition fees paid for universities and colleges, medical receipts, etc. The total tax calculated on your income is federal plus provincial taxes. In Canada, we follow progressive tax system. This means that higher the income, higher the taxes. There are income slabs or brackets, and depending on which slab or bracket your taxable income falls in, the taxes are calculated accordingly. What exactly are you filing? In Canada, we follow self-assessment system of taxation. What does it mean? It means that you report all your earnings, credits, and benefits claimed for the year to the government by completing a document. For residents of Canada, for tax purposes, this document is called T1, Tax and Benefit Returns. Non-residents have to submit a different tax returns called 5013R, Income Tax and Benefit Returns for Non-Residents. We will discuss T1 form, or the T1 General. The T1 is a federal form that also contains tax schedule and forms for calculated Ontario taxes.
Okay, we will just discuss very briefly what exactly is T1 General in the form of a diagram. So T1 General actually, see, when you file your tax returns, you're filing T1 General. Now, T1 General is made up of many steps. The first step is you fill in your details, or if you are not doing tax returns yourself, you may be going to your accountant, community agency, whoever files your tax returns. So that person would fill in all your details, your name, your identification, your social insurance number, date of birth, and so on. Step 2, it requires you to fill in your total income. This is income from all sources, your employment income, or maybe you have some foreign income, maybe you have interest income from bank, etc. All possible income you have to fill in here. Then step 3 would give you your net income. So this is obtained by subtracting all allowable deductions. Now, what is this allowable deductions? More on this in later slides. And so deductions will be deducted from your net income, from your total income to arrive at net income. This is step 3. And what's step 4? Step 4 involves reducing a few more deductions if you are eligible from the net income obtained in step 3. This finally results in your taxable income. So from your total income, many things are deducted to finally arrive at step 4, which is taxable income. Then step 5 is calculation of taxes. This is schedule 1 of T1 is used to calculate your federal taxes, and form 428 is used to calculate the Ontario taxes. And finally is the step 6, which is the total tax from step 5 is used to arrive at any refunds, and all tax credits are applied at this stage to be deducted from total tax to calculate your refunds. So finally, the refunds that you get in your hands is known at step 6. And all taxes and credits are calculated by the software based on the information you enter in step 1 and step 2. So this is what is all T1 General is about. Now, Valentina will continue further.
In the next 2 slides, we will discuss what exactly are the documents we will need in order to file the tax returns. Well, first of all, an accountant or community agency can help you to file your returns by filing in your T1. T1 can be filed electronically or by mailing paper returns to the CRA. Let's look at the documents you need. First, we need 2 pieces of governmental issued ID, social insurance number, all tax slips such as T4, T4A, T5, and other relevant tax slips, rent receipts, property tax bill, medical prescription receipts, if any, foreign income or pension slips, if any, tuition fees paid receipts for students, date of lending for newcomers if lended in the tax year, direct deposit form if your bank information is not on CRA records. Further, we'll talk about the tax slips. Individuals receive tax slips from employer, bank, agencies from where they receive their income. Tax slips provide information about the total income and benefits individuals received in the previous year. You must get these slips by mid-February of each year and take these slips to the agencies that prepare your income tax returns. Let's look at some of the common tax slips. These are, as we mentioned before, T4, which is statement of remuneration paid, T4A, statement of pension, retirement, annuity, and other income, T4A for OAS, statement of old age security, T4 RSP, statement of RRSP income, T5, statement of investment income, T2202A, tuition and enrollment certificate. There are other slips could be needed, which you can find more detailed information on the link provided below.
Now let's see deductions and tax credits. This is our final topic, is about deductions and tax credits. So 4 important concepts to file tax returns are exemptions, deductions, and tax credits, which are of 2 types, refundable and non-refundable, are the important concepts that affect our taxes owed and refunds. Let's discuss now these in detail. Exemptions. Exemptions are those incomes that you earn and do not have to report in the tax returns. No reporting, no recording, no taxes. For example, if you earn $3,000 through your garage sale, you do not have to report that $3,000. Let's look at other exemptions in the gray box. Most lottery winnings, Canada Child Benefit, GST, HST benefits, Ontario Trillium benefits, reimbursed expenses, garage sales. Deductions. As discussed in previous slides, deductions are those that are reduced from your income. For example, individuals paying for child care can be deducted from their income. This results in reduced taxable income. Reduced taxable income will consequently lead to less tax. Now let's look at tax credits.
Okay, while deductions are deducted from your income, leading to less taxable income, tax credits are those that are reduced from any tax that you owe, leading to less tax and refund. Tax credits are of 2 types: non-refundable tax credits, and those are the ones that are reduced from your tax owed, such that your tax can be reduced to 0. Non-refundable tax credits do not result in any actual cash flow to you. Refundable tax credits are those that result in actual cash inflow to you. The government will give you money back in the form of refundable tax credits. Let's discuss this further in the next slide. Non-refundable tax credits. These credits can be used only to reduce the taxes for those that pay taxes. This is worthless to those that do not have to pay taxes. Tax coupon redeemable off your taxes only. Basic personal amount, tuition tax credit, disability credit for self, interest paid on student loans, eligible medical prescriptions expenses. Now, refundable tax credits. You'll be paid these credits if you are eligible, irrespective of whether you pay taxes or not. And those are HST, GST tax credit, WITB, Canada Child Tax Benefit, and Ontario Trillium Benefit. You will get a refund if sometimes an individual is eligible to get refund upon filing tax returns. The CRA sends refunds within 2 weeks of filing returns electronically. When can you expect a refund? If your employer has deducted more taxes from your paychecks that you are supposed to pay, for example, if your employer has deducted a total of $5,000 for the entire year as taxes from your annual pay, and you need to pay only $2,000 as per 2019 individual tax returns, then you'll get a refund of $3,000 from CRA. Other reasons for getting a refund: over contribution to CPP or EI, or you are eligible for other refunds such as medical expenses, etc.
So now let's look at CVITP program for low-income individuals and families. Community Income Tax Program is a program conducted by the CRA to help low-income families to file their tax returns for free. Through the Community Volunteer Income Tax Program, community organizations host free tax clinics where volunteers do tax returns for eligible people. Annual income eligibility for to avail these free services are for single person, it is $35,000. For a couple, $45,000. A couple with a child, it is $47,500. Here at Niche, for many years, North York Community House has been hosting free tax clinics for the benefits of its eligible clients and communities. This year, tax clinic will be scheduled once a week in the month of March and April. The dates and timings will be announced in the last week of January 2020. Here we complete our presentation, and now we are ready to take questions from you.
Okay, we have a question here. It says, I'm a refugee claimant and I do not have any SIN number. And how can I file my tax returns without a SIN number? This is a good question that we encounter many times, encounter often. If you are a refugee claimant, you can definitely file your tax returns even though you may not have a SIN number. You have to contact the CRA in order to get what is known as an individual tax number. So once you get that individual tax number and bring it to us, we will be happy to file your tax returns using that individual tax number. So as long as you have the individual tax number in place of SIN number, you can file your tax returns even though you're a refugee claimant. Okay, any more questions? Oh yeah, we have one more. This is a very interesting question. The question says, can newcomers claim GST, HST? Yes, definitely. As soon as you land in, if you are a PR, if you have a PR status, or even a conventional refugee status, you can visit any of the community agencies and they will file the GST, HST application for you. So even though you may not have filed your first tax returns, but yet you can claim the GST, HST benefit. And subsequently, when you claim your tax returns, you will automatically get the benefits once you file your tax returns. Okay, there is one more. Our citizens are also considered as residents for tax purposes. This is a good question. In fact, even if you are a resident of Canada, there are different types of residents called ordinary residents, deemed residents. So yes, under that category, citizens are also considered as ordinary residents of Canada, because this is the place where they conduct their normal routine life. So anybody who conducts the normal routine life in a particular country is considered as a resident of that country. So by that logic, citizens are also residents of the country. Yes, for tax purposes. Okay, there's another question. It says in one of your slides, you said WITB is a refundable tax credit. So can you please expand on that? WITB is called Working Income Tax Benefit, and this is the benefit that can be claimed by people who have low income, who work on low incomes. They are eligible for Working Income Tax Benefit. But however, for that, you have to file your tax returns first. Okay, there's one more question. Realistically, how long does it take to receive the GST HST credit, and how will I receive it? Okay, now GST HST is usually given on a periodic basis. It is given every quarterly, starting from June of this year. So every quarter, then next is October, then again in January and April. So you will get it every quarterly. And how shall you receive it? You will receive it if the CRA has direct deposit information, that is your bank account information on their records, they will directly deposit to your account. Otherwise, you will get a check. Okay, there's one more question. What happens if tax returns are not filed by refugee claimants? Yes, now, see, whenever refugee claimants are in Canada, obviously they're going to live here and they are going to make Canada their home. So by that logic, it is good to file the tax returns. Now, if you haven't filed your tax returns at all as a refugee claimant, then you can file for the prior years that you haven't filed. Up to 10 years back, you can file your tax returns. So it's okay if you haven't filed it. So whenever you start filing it, please make sure that you file the the prior year's tax returns as well. Okay, there's another question. Are the payments for long-term disability refundable? Yes, definitely they are refundable, especially when you have spent money on buying accessibility or mobility devices, etc. Then those they are considered as refundable disability claims. Yes, then they would be refunded. Okay, I think that's it. Thank you very much, and we will send you a feedback form soon. And please let us know how we did. Your feedback is really very important to us. So thank you very much.
Thank you so much.
Thank you.